we go. Hi, everyone. I'm Dan Schulman, and with me is David Vélez. And this is going to be probably the most authentic conversation that you will see today, because we were supposed to be interviewed by a moderator who unfortunately couldn't make it here last minute because of travel difficulties. David and I, of course, did not prepare at all because we knew the moderator was going to ask all the questions, and we were ready for whatever came our way. So we just spent...
We're just shot.
Yeah, we're just going to go for it because we have quite a bit to talk about, and we really look forward to the conversation. David, I've spent, quite a bit of time studying NuBank, and I know you've looked the same at PayPal and Venmo as well. I think today you have something like 100 million customers. PayPal has now surpassed 400 million customers around the world. And I think the thing that was on everyone's lips recently has been the fact that NuBank's market cap is now, depending on the day, equal to that of Itaú, and surpassing all of the other banks. So first of all, congratulations on that success. But I think it'd be really interesting for people to hear, kind of as you came in to the market, like what were the pain points that you saw? What were the things that you felt like to grab this market, to be successful, to recreate kind of the next generation of what a financial services company might look like? What were those success factors, and how did you go about developing them?
Great. So I guess, first of all, since 2012, when we started working on NuBank, the vision was that the digital banking model, a bank without branches, fully in smartphone, was the best way to bank 90% or 95% of the world's population. That kind of the underlying bet for us has been that 10 years from now, 20 years from now, 95% will be banked fully online, and that banking branches will disappear. And why is that? It's because when you get to use digital channels to access customers, your cost to serve not only is 20x more efficient, but you can pass that efficiency to the end customer, offering better products at lower cost. So effectively, technology allows you to provide a better product at lower cost. That's sort of the simple formula that we've been trying to execute for a while. Now, Brazil is probably the best place in the world to execute that thesis, because there's a number of additional tailwinds. Not only the demographics, people talked about demographics. Brazil is seen as the social media capital of the universe with the usage of technology. But we also saw a market that had 5 banks that owned about 85% of the market. A market that was extremely consolidated in 5 banks, and that meant significant percentage of the population was outside the system, and the people that was inside the system were paying some of the highest interest rates and fees in the world. And when we saw that market, we saw a very dissatisfied consumer, and with a culture of consumer obsession, we created an environment and a product that tried to wow that customer. And then you had a regulator that created an infrastructure that really accelerated the inclusion and the digitalization of the economy. So Brazil really was the perfect storm in terms of grabbing a global thesis and accelerating that thesis in an environment of a lot of access to technology. Yeah. But then I wonder if that's the case. I apologize for my voice. I'm getting a little sick. I wonder if that's the thesis that you were also looking at as you grow in the US and in emerging markets at PayPal.
Yeah, I think we have the same vision. I think you can have all the power of a bank branch in the palm of your hands. I think the technology that when we originally started, and the technology has advanced so rapidly today, and we'll talk about that in just a little bit. But with technology, you can do things faster, you can do things less expensively, and you can bring more people into the system. There's a saying that it's expensive to be poor. Unfortunately, that's very true in the financial system. In what is really kind of a backwards way of thinking about it, the less money you have, the more expensive it is to make transactions. And when you think about it from a government perspective, when you think about it from a regulator perspective, what are they trying to do? They're trying to strengthen the economy, and they're trying to strengthen the economy through financial inclusion by having more people come into the economic system. And that is what both of us can do with our technological platforms. You have something like 2 billion people in the world who are completely excluded from the financial system right now. And I would argue you have another 2, maybe 2.5 billion who are well underserved by existing financial institutions. That's a massive addressable market for both of us, and our teams are both maniacally focused on that. I would say, and I'm curious to hear your perspective on this, that technology is advancing so rapidly right now. I think when we were thinking about reducing the cost of a transaction, today, when you think about blockchain infrastructure, when you think about the advent of stablecoins, CBDCs here in Brazil, PIX, open finance, the emergence of the DREX, which really looks to tokenize the entire economy, I think the opportunity of taking transactions down by 1/100th the cost of what they are today, doing them instantaneously instead of in days, which really matters to people who don't have cash. You know, their cash flow matters tremendously. So instantaneous settlement is extremely important and a huge part of the value proposition. Do you think that the infrastructure that Roberto Campos and the central bank have put into place, what I would say is probably one of the most progressive and most advanced underlying technologies in the world for digital finance, is that a tailwind for you? Do you think of that? How do you think of that going forward?
Yeah. So I think it's a massive tailwind because, number one, it increases the addressable market of banking. You go from, in Brazil, in a banking market that had about 100 million people to a banking market that has something like 170 million people. Suddenly, everybody above the age of 8 needs an app to pay for stuff, right? The moment you finish cash, you need an app to pay for stuff. And so it increases the addressable market. And what I think that the part is understood well, but I think the part that is not that well understood is the second order effect of that, which is the moment you formalize a significant part of the economy, you bring 60 million people into a formal economy, and you change cash for digital payments, you suddenly have data on a significant percentage of the population that you didn't have, which means that becomes the entry path towards creating a credit proposal or proposition. When you look at Mexico has 12% credit card penetration. Colombia has 12. Indonesia has 4. Philippines has 3. So when you look at emerging markets, they don't really have credit. Credit doesn't exist. Or I would say differently, it exists with the loan sharks, where people are paying 10% per day to their friends and family because banks didn't have the distribution cost and they didn't have the data. So I think that perhaps the biggest revolution is 5 years from now, you'll see a PIX-like system in every single country in the world. That means increasing addressable market by 2 billion people. And then imagine what that means in terms of credit for 2 to 3 billion. That could double the $7 trillion financial services market in the world. That is the biggest market, the single biggest profit pool of any industry globally is financial services, and 70% of that is credit. So we are seeing a huge potential revolution in terms of access to credit, which then has third-order effects. That's more businesses that can be started. That is more consumption. That is more investing. That is a real financial inclusion path. People might begin with a PIX, but then they get an insurance policy. They get their first credit. They get an investment. They invest in equities. They invest in crypto. You see, you can track very clearly that entire inclusion journey. And again, that means additional increases in the size of this market. So it's a global trend, and I think it's safe to expect that this will happen really everywhere.
I think the very form of currencies is going to change. I think, to your point, you'll have PIX-like systems connected together, country to country. And think about it as kind of almost having, instead of, today we have very separate systems. I think you'll have kind of merged platforms, or at least APIs and protocols that allow currencies to easily flow across a platform. And the metaphor that I think about is, I used to be in the wireless industry, and we all had separate text messages that you could only text message somebody within your company. Like, in the US, Verizon customers could only text Verizon customers. And people were very protective of that. But once we decided to make text messaging interoperable, that anybody can text anybody, it exploded in popularity. The number of transactions just doubled and tripled and quadrupled. And so I think the same thing is going to happen with transactions as well, but they're going to happen in ways where transactions are going to be at truly a fraction of the cost, instantaneous. And then you're going to have more and more tokenized collateral that goes on. Like, you'll tokenize somebody's automobile and be able to provide credit on collateral that is a tokenized form of that going forward.
Did you try to build a global PIX at PayPal? That seems also like another big trend, right? Ultimately, there should be a global PIX uniting all the different payments.
Well, you think about P2P,
you had 400 million people.
Right? Yeah, so person to person is in effect, a global free transactions that can go across that system. And PayPal did $1.5 trillion of volume over kind of what was a global PIX. But I think the power of what the Brazilian government, the central bank has done right now is kind of put together a private and public partnership. And then, of course, and we don't have really time to talk about this, when you overlay AI on top of that, and AI, for those of you in the room who are not as deep into it as David and I are, is going to fundamentally take the financial system and take it to the next level as well. So I think we're out of time, unfortunately, and David, it was a pleasure, and thank you, everybody, for your time.
Thank you, Dan. Thank you, everybody.